Okay. So, you know how everyone keeps saying the stock market and home prices are like connected?
Yeah.
It's like one of those things you hear and you're kind of like, that makes sense, but like,
Right.
how does it actually work?
Right, exactly.
Well, for this deep dive, we're going to unpack exactly that.
Awesome.
How does the stock market actually influence
Huh?
what you might pay for like your new home or
Mm.
what your current home is actually worth?
Yeah.
And we're not just going to like talk theory here.
Yeah.
We're going to dig into some real trends, some real
Oh,
examples.
sure.
We've got some insights from Angela Lazaro. She's a realtor down in Richmond, Virginia.
Oh, yeah, she's great.
Yeah, so she's seeing this stuff firsthand in a really interesting market.
Absolutely.
So yeah,
Richmond's a really good example, I think, for this.
yeah, it is. So Angela's perspective is going to be crucial for us today.
Totally.
So our mission today really is to kind of just give you a clear picture of this relationship,
Mm-hmm.
the stock market and home prices.
Yeah.
How does one affect the other? And we're going to do it without like all the crazy jargon and stuff.
Right, right. Got to keep it clear.
Keep it nice and simple.
Exactly.
So, okay, let's unpack this thing.
Okay, let's do it.
Where do we even begin? Like, what are the fundamental connections here?
Well, one of the big ones is this thing economists call the wealth effect.
Okay.
So basically, when the market's doing well, when it's up,
Yeah.
people just feel wealthier, right?
Makes sense.
And this isn't just like on paper, it actually like translates into real spending.
Oh, and
Like
so?
people feel more comfortable making bigger purchases.
Okay.
And, a house is a pretty big purchase.
Yeah, that's a big one.
So there you go. That's the wealth effect in action.
So it's like that feeling when you check your, 401k or your stocks
Yeah, exactly.
and they're doing well.
Right.
You kind of just feel a little bit more, free
You're more
to
confident.
check on something big,
Exactly. More comfortable taking risks.
like a mortgage. Yeah. Okay.
Oh.
That's really interesting. Okay, so what's the next piece of this puzzle then?
Well, interest rates are huge.
Okay.
The Federal Reserve, they're always watching the economy super closely.
Yeah.
And a strong stock market usually means the economy's strong.
Okay.
So sometimes they might try to, cool things down a little.
Like tap the brakes.
Exactly, tap the brakes. And they do that by raising interest rates,
Okay.
which makes mortgages more expensive.
Ah, so it's like a ripple effect.
Exactly.
The market's doing well, everyone feels rich, but then,
Right, but
the Fed's like, got to raise these rates.
Right, gotta keep things from overheating.
Yeah, and then suddenly mortgages are more expensive.
Exactly. So it's kind of a double-edged sword.
It is. Yeah, that's super interesting.
Yeah.
Okay, so what about like the flow of investment itself?
Oh, yeah, good point.
Like how does the stock market's performance actually influence where people put their money?
So that's where this idea of investment shifts comes in. When
Okay.
the stock market gets all volatile or, starts taking a dip, it's like a downturn.
Yeah, exactly. A downturn. Some investors get a little spooked.
Makes sense.
They want to find something safer,
Yeah.
less risky.
Right, like that classic safe haven.
Exactly.
Yeah.
And real estate is often seen as that safe haven.
Interesting.
So you get all these investors moving their money out of stocks and into property,
Wow.
which drives up demand. And guess what?
Prices go up.
Prices go up. You got it.
So stock market uncertainty actually can boost the housing market.
Sometimes. Yeah, it's counterintuitive, but it happens.
Wow, that's fascinating. Okay, so let's bring this back down to earth.
Okay.
How has Angela seen these things play out in Richmond?
Well, she's got some great examples.
Okay.
She was talking about the late 90s and then again in the mid-2010s.
Okay.
Remember those big tech stock booms?
Yeah.
Well, she saw a huge jump in luxury home sales in Richmond during those times.
Oh, wow. So that's like a direct link.
It is. It's that wealth effect in action.
People are making money in tech stocks,
Right.
and they're like, let's go buy a fancy house. Exactly. They're feeling good. They're ready to spend.
That's so interesting.
Yeah, it's really clear when you see it in a local market like that.
Totally.
Yeah.
Okay, what about the flip side?
Yeah.
What happens in Richmond when the market tanks?
Well, Angela says it's definitely tougher than just like everywhere else.
Yeah.
People get nervous.
Right.
They hold back on big purchases,
Hmm.
and those investment shifts can reverse.
Oh, so people start pulling money out of real estate.
Yeah, sometimes they need to liquidate assets to cover losses,
Okay.
but it's important to remember that every local market is different.
Right.
Richmond might be affected differently than, say, New York or LA.
Yeah, that makes sense.
There are local factors at play, too, like job growth and how much housing is available.
Totally. It's not just a one-to-one thing.
Nope, it's way more complex than that.
Okay, so we've looked at these basic principles now.
Yeah.
Let's dig into some historical examples,
Okay, sounds good.
to really see how this all plays out in the real world.
For sure.
Let's start with the big one, the 2008 financial crisis.
Oh, yeah, that's a classic.
Can you walk us through how the stock market and housing market were connected back then?
2008 is a really good example of how intertwined these things can be.
Hmm.
Though actually back then it was the housing bubble that burst first.
Oh, really?
Yeah, so for years, home prices had been going up and up,
Okay.
fueled by this thing called subprime lending.
Subprime lending.
Yeah, basically loans given to people who probably couldn't afford them.
Oh, so risky loans.
Very risky, and eventually it all came crashing down.
What happened?
People started defaulting on their mortgages left and right,
Mm-hmm.
and these things called mortgage-backed securities, they lost tons of value.
Weirdos.
They're basically bundles of home loans that investors buy and sell,
Okay.
but when people can't pay their mortgages,
Right.
those bundles become worthless.
Oh, so it's like a chain reaction.
It is. The whole financial system started to shake.
Wow.
The stock market followed. It totally crashed as investors panicked.
So the housing market took down the stock market.
In that case, yeah, it was the trigger.
Okay, wow.
Yeah.
What did Angela observe in Richmond during that time?
Well, she saw a ton of foreclosures,
Okay.
just like the rest of the country.
Yeah.
But she also noticed that Richmond actually recovered faster than some other places.
Oh, interesting. Why is that?
It could be a lot of things. Local economic factors, you know?
Mm-hmm.
Maybe Richmond had a more diverse economy or something.
Right. So even within a national crisis,
Yeah.
different places are affected differently.
Exactly. There's always local nuance.
Okay, that makes sense.
Yeah.
All right. Let's jump to a more recent example.
Okay.
The COVID-19 boom from 2020 to 2022.
Ah, yes. That was a wild time.
Can you remind us what happened there with the stock market and housing?
So at the very beginning, when the pandemic hit,
Yeah.
the stock market totally tanked.
Right. Everyone was freaking out.
Totally. It was all this uncertainty and lockdowns.
Yeah.
But then it bounced back hard,
It did.
partly because of government stimulus and the Fed slashing interest rates.
Right. Those rates were crazy low.
Super low. And that had a huge impact on the housing market.
How so?
Well, suddenly mortgages were super cheap.
Yeah.
And at the same time, people wanted more space.
Right. Everyone was stuck at home.
Exactly. They wanted home offices, backyards.
Yeah.
So it created this huge buying frenzy.
Wow. And Angela saw this in Richmond.
Oh, yeah. Big time.
What happened there?
She said home prices jumped like 20% or more in a lot of neighborhoods.
That's a lot.
It was a crazy seller's market.
Wow. So it seems like a strong stock market can often lead to a strong housing market.
Yeah, especially when you combine it with low interest rates.
Right. But we also saw that a housing crash can drag down the stock market.
Absolutely. They're definitely connected.
And like you said, local factors always play a role.
Always.
Okay. So let's talk about right now, 2024.
Okay. The present moment
Yeah, it's kind of confusing, right?
is a bit.
The S&P 500 is hitting record highs.
Yep.
Which you'd think would mean housing prices are booming too.
Right.
But mortgage rates are still pretty high.
Yeah, they're up in the 6-7% range.
So why aren't home prices like totally plummeting?
That's the million-dollar question.
It is. So what's Angela seeing down in Richmond?
Well, she's described it as a split effect.
A split effect. Okay.
Basically, the stock market gains are giving some people, higher earners,
Yeah.
more money for down payments.
Okay.
But there just aren't that many homes for sale in Richmond.
Right. Low inventory.
Exactly. Low inventory keeps prices from falling even with those higher mortgage rates.
So it's not just about how much it costs to borrow.
Right.
It's about how much stuff is actually available to buy.
Exactly. Supply and demand is still king.
That makes total sense.
Yeah.
You also mentioned the booming AI and tech stocks.
Oh, yeah.
How are those affecting things?
Well, it's not just about the stock prices.
Okay.
These companies are creating jobs and boosting the economy,
Mm-hmm.
but it's happening in very specific places,
Like where?
like Austin, Raleigh, parts of Virginia, where Angela is,
Okay.
places with a big tech presence.
So the wealth effect is even stronger in those areas.
Totally. And you've got all these high-earning tech workers moving in,
Right.
which drives up housing demand even more.
Wow. So it's like certain parts of the stock market are having a bigger impact on specific places.
That's exactly right.
Okay. So the takeaway here is that the stock market definitely matters for home prices.
Yeah, it's a big factor.
But it's not the only thing.
Yep.
Supply and demand in local markets still matters a lot.
It's always about the local context.
This has been super helpful.
I'm glad to hear it.
So what are some things our listeners should keep in mind based on all this?
Well, for investors, I'd say keep an eye on the Fed
Okay.
and what they're doing with interest rates.
Yeah.
And watch the overall stock market trends. Those can be good indicators for the housing market.
Interesting. Okay. What about for buyers and sellers?
I'd say find a good real estate agent,
Okay.
someone who really understands your local market,
Right.
someone who can explain all these big national trends in the context of your specific city or town.
Yeah. Yeah, like Angela down in Richmond.
Exactly. She'd be
Huh.
the perfect person to talk to if you're in that area.
Totally. Okay, so to wrap up our deep dive today, we've really explored this fascinating relationship between the stock market and home prices in America.
Yeah, it's a complex one.
We talked about the wealth effect, interest rates, and investment shifts. And we looked at historical examples like 2008 and the COVID boom.
Right.
And we even touched on the current market and how it's playing out in Richmond.
Yep, with Angela's great insight.
Exactly. So thinking about the big picture here,
Yeah.
we've got these record stock market highs, but mortgage rates are still high.
Right. It's an interesting situation.
How long can that last?
That's a good question.
And what about the future of technology?
Yeah,
How will things like AI affect housing markets?
especially in those tech hubs we were talking about.
That's a lot to think about.
It is.
So yeah, I'd encourage everyone to maybe research your local housing market
Good idea.
and pay attention to what the Fed is doing with interest rates.
Yeah, stay informed.
And maybe even learn more about the economy in your specific region.
Absolutely.
All right, well, thanks for joining us for this deep dive.
Yeah, this is fun.
It was until next time. Stay curious out there.
See ya.